Alright guys, now let's go over Wednesday's price action. I'll walk you through what I was looking at before the market opened, the setup I took, and how it played out. So this is the 15-minute chart from around 9:25 a.m. just before the open. The two key levels I had marked were the London high up at 25,210s and the Tuesday low down at 24,728s. Now if you look at the structure coming into Wednesday, the market was pushing lower aggressively. So heading into the New York Open, my bias was clearly to the short side. I was not looking to buy into any of this selling pressure. The plan was simple: wait for the market to pull back into one of the 15-minute fair value gaps above, and then look for a short setup on the lower time frame. Now zooming into the 1-minute chart, you can see what happened around the open. The market opened and immediately we got a pullback. That pullback came right back into the 8:30 a.m. 15-minute fair value gap. The zone you can see highlighted here between roughly 24,935 and 25,000. This is where I started looking for a setup. On the 1-minute, price came into the gap, showed some reaction, and a short setup formed. You can see I have marked the 946 inverse fair value gap, and when price closed below it, that's where I entered. The entry was around the 24,960 area, with a stop placed above the gap at 24,990. That's 30 points of risk. The target was down to 24,864, which gave us a 3.2 risk reward on the trade. The setup was clean and matched the overall bias, so I took it. And here is how the trade played out. Price was trading in our entry zone for 20 minutes, and at one point it almost came back to my stop loss. But luckily it started going down again, and in the next 15 minutes it came down and hit the target at 24,864. The trade closed with 96 points of profit at a 3.2 hour, which is a solid result for a single setup. Now one thing worth noting here, after the target was hit, you can see price continued lower. There's always a temptation to think I should held longer, but the key thing is the setup was planned before the trade, the target was defined before the trade, and it hit. Taking profits at your planned target consistently is what keeps you profitable in the long run. Trying to catch every last point usually does more damage than good. Here, looking at how the rest of the day played out on the 15-minute, you can see the market came back up and consolidated for an hour and continued moving lower. But since it's an FOMC day, I didn't want to risk anything else before 2 p.m. Eventually, after FOMC, the market slowly continued lower and swept the Tuesday low at 24,728. I didn't see any clear setups during this period, so I stayed out for the rest of the day. Sometimes the best trade of the day is the one you already took, and knowing when to stop is just as important as knowing when to enter. So that was Wednesday. One clean setup, one clean target hit, and done for the day. If you guys found this helpful, consider subscribing to the channel, and I'll see you guys tomorrow.